Hey, good morning or good afternoon. This is May Valensky with Driving Markets. Apologies for the late broadcast due to a technical error. Remember, anything said in this video is an opinion only, and therefore it's going to give you direction based on my opinion. If you act on it, great, and you make money, fantastic. If you act on it, lose money, so be it. So let's just get into it. So the markets the last couple of days have really been shooting up. They've gone up significantly on the back of the Federal Open Market Committee minutes from Wednesday. What exactly did Jerome Powell and all of his cronies say? Well, what they state is that they're going to fight inflation aggressively. They're going to be very firm and very assertive. And this sent a great message through to financial markets. All the markets shot up. Why? Because they could see a steadfastness in the approach over the central bank in the States, the Fed, that they plan to take or grab inflation by the horns. So that's going to give a lot of confidence to the traders and to investors. On the back of that, they believe inflation has peaked, and they believe that's it, it's the end of inflation, and therefore we're in a very good position to move forward. Well, actually, in my opinion, I don't think that is going to be the case. I think there is an undercurrent of very hot, furnace-y, volcanic inflation that's going to burst up, and I think that's been missed by the central banks. I'm calling inflation at 11-12%. I don't believe it's going to peak at 8.6 or 9%. I just simply don't believe it, and therefore I'm a big bear, and I can see that the markets are going to go down further. Saying that, the last 2 days they've been up significantly, with the Dow approaching 31,500, the Nasdaq up to 12.5, and the S&P up there, with the UK and European markets recouping some of their losses. However, as I've said over and over again, the trend overall is down. It's south. So just keep an eye on that. Bitcoin's interesting because Bitcoin creeped up all the way to about 21,700, 21,800 between yesterday and today. Again, it's approaching the 22,000 resistance level. At that level, it looks like there could be some sellers and it could come off. Remember, it is range bound. So Bitcoin, so it's around about the 21,500 level, looks like, in my opinion, as a sell, all the way down to that 17,500 level. It hasn't broken down yet below 17,500 level, but I do believe it will break down. Meanwhile, it's a good trading range to capitalize on that particular trading range. Let's look at some other assets. Gold's come all the way down to $1,743, which is a big fall from where it was 3 months ago, just to 2,100. I think at this level, gold may be a buy around about the 1720, 1730 level, all the way up to 1950, maybe even 2000. Unless there's another war breaks out or Putin decides to invade another country, then gold will probably be limited at the upside of 2000, the lower side about 1700. Again, you got a good trading range on there. Looking at FX, again, the view on the street is that the dollar has peaked and the dollar is maxed out. In my opinion, it hasn't. I think it's going to go up a lot further. Remember, all of the 0.75 basis points, which are going to 75 basis points, that are going to occur in the UK. They're talking in the US, they're talking about between 50 and 75 basis points. I think it's going to be more like 75 basis points. It's already priced into the market. But since I believe that inflation is much higher than it is, I think interest rates will move up and much higher. And therefore, I'm more speculative on a strong dollar and a weaker major like the euro, pound, yen, etc., etc. Look at the euro dollar. Euro dollar's all the way down to 101. It's going to break the 1-on-1 par and probably going to go to 98 to a dollar, in my opinion. Again, I think it's on for an absolute beating. As regards the pound, I think the pound short term will float down to about 115 to the dollar. The pound looks very weak. Boris Johnson's resigned. Whether he's going to stay Prime Minister or not, we don't know, but that's also having an impact on the UK. The markets did like it. The pound liked it, that he did resign, add a bit of stability to the UK government. I particularly like Boris Johnson, but if he's resigned, let's see who else is going to come in and replace him. Also looking at bonds, the 10-year Treasury and the 2-year Treasury are still inverted, and that normally is a sign of recession, where the 2-year yield is higher than the 10-year yield. So 2-year yield refer to mortgages, refer to short-term loans, and 10-year refers to longer-term loans like mortgages, bank car loans, etc., etc. So the 10-year yield at the moment is lower than the 2-year yield, and that is an indication of a recession because it's inverted, it's going backwards. What normally should happen, that the 2-year should be lower than the 10-year, but that's not the case at the moment, and that is a bad sign. And it looks like it's recession indicator, even though officially we're not in recession. Most bankers, most investors, most traders believe we are either in one or on the border, on the cusp of a recession. That's going to impact financial markets also, and corporate earnings. Obviously, today we've got the big number out, which is non-farm payrolls in the States. That's a massive number, and that will give an indication as to which direction the US employment is going, whether it's going up, going down, and the markets will react accordingly. I believe that the number is going to be lower than expected, so there'll be a drop off in the number of vacancies. That's my opinion, but again, that comes out at 1:30 UK time, 08:30 US time. That's more or less it. You can catch me on all the media, which is Twitter, Instagram, YouTube. Subscribe, like. Let's get this channel going. Let's move it. It's not moving fast enough. Meir Walensky, Driving Markets. Have a good day.